Welcome back to Investing Talk Podcast. Today, we're zooming in on CrowdStrike Holdings.
Ah, CrowdStrike.
You've shared some really interesting articles and a pretty thorough due diligence report with us.
Yes, quite a bit of material to go through.
And our goal here is basically to extract the key insights, help everyone get a clearer picture of what's actually happening with this cybersecurity company.
Makes sense. It looks like a company with, well, significant growth, but operating in a pretty high-stakes field.
Definitely. We'll look at their recent performance, financial health, what analysts are saying.
And try to make it click without being too overwhelming.
Exactly. So let's get a quick overview first.
Good idea.
Founded back in 2011, based in Austin, Texas, they focus on endpoint security, threat intelligence, cyber attack response.
Right, and it's all built around that cloud-based subscription model.
That's the core. And their Falcon platform, that's central, isn't it?
It seems to be, covering things like identity protection, hunting for cloud threats. Quite comprehensive.
Okay, so let's maybe start by digging into how they've been performing financially lately.
Okay, the financials, they really tell a story of rapid expansion.
Yeah.
For the fiscal year ending March 2025, total revenue hit $3.95 billion.
Wow, okay.
And just for context, that's a pretty big leap from $3.06 billion the year before in 2024.
And even more from 2023.
Right, $2.24 billion back then. What really stands out, I think, is the consistency.
Consistent growth.
Yeah, that revenue trend, averaging over 30% growth each year, compound annual growth rate for the past few years.
That kind of rate definitely gets your attention.
So some real momentum.
And looking at the more recent stuff, the quarterly data, in the fourth quarter of fiscal 25, their earnings per share, the EPS, was $1.03.
Okay.
Which actually beat the forecasts. They were expecting more like $0.80.
So an earnings beat, that's usually good news.
It is. And for the full fiscal year 2025, analysts were looking for an EPS of $0.55, which itself was up from 50 cents the year before.
So positive signs on the earnings front, at least for that quarter.
But I sense a but coming.
Well, there's a bit of nuance, as always. For that same fourth quarter, yes, total revenue grew 25% to $1.06 billion.
Strong growth.
And their annual recurring revenue, ARR, that was up 23% year over year, reaching $4.24 billion. Solid numbers.
Okay.
However, their earnings forecast for the next fiscal year, apparently that didn't quite meet what the market was hoping for.
The forward guidance.
That's the one. And according to the sources, that outlook led to an initial dip in their stock price.
The market is always looking ahead, isn't it? Future outlook really drives sentiment, even with good current numbers.
It certainly does.
And interestingly, despite all that revenue, the company reported a net loss.
That's right. A net loss of $19.27 million for the fiscal year ended January 31st, 2025.
Which gives an EPS of what? Negative 0.078 cents?
Correct. So even with billions in revenue, they're not actually profitable on the bottom line yet.
Looks like they're still investing very heavily in growth.
That seems to be the strategy. That net loss suggests a deliberate focus on aggressive expansion.
R&D, sales, scaling up.
All those things cost money. It's a very common trade-off you see, especially with high-growth tech companies. They prioritize capturing market share now over immediate profits.
Makes sense. Okay, let's pivot a bit. Let's look at the market dynamics, how the stock itself has been behaving.
Okay. Well, on April 8th, just recently, there was quite a bit of trading activity.
Oh, yeah.
Volume was around $1.75 billion, putting it among the top 50 most traded stocks for that day.
So lots of eyes on it.
Definitely. And the price ticked up slightly, 0.21%, continuing a kind of modest upward trend recently.
And if we zoom out, look at the past year.
Over the last year, the stock's actually done pretty well, up 22.28%.
Which is better than the broader market.
Yes, it's outperformed the overall U.S. market during that period.
But you mentioned some volatility earlier.
I did. About 6 months before that April date, back in July 2024, there was that software update issue.
The global outages. I remember reading about that.
Right. That caused some pretty significant disruptions, and it definitely had a temporary negative impact on the stock price.
Understandably.
It seems they've largely bounced back since then, stock-wise, but it does highlight, the operational risks. Software companies aren't immune.
A good reminder. And it's interesting, despite that incident, BTAC just upgraded them.
They did. Upgraded the rating to buy with a $431 price target.
That signals some real optimism about the long term, doesn't it? Even with those short-term bumps.
It suggests a belief, at least from that analyst firm, that the underlying strengths of the business outweigh those temporary setbacks.
Which brings us nicely to What are those core strengths? And maybe the weaknesses or red flags that came up in the material?
Good transition. Let's start with the positives.
Okay, strength. What's driving the optimism?
Well, first off, that robust revenue growth we talked about and strong cash flow generation. That's fundamental.
And the margins?
Very healthy gross profit margin, nearly 75%. That indicates the core business itself is quite profitable before other expenses.
That's a strong base.
Then there are the strategic partnerships. The one with AWS, Amazon Web Services, seems particularly significant.
How so?
It's apparently generated over $1 billion in sales through the AWS marketplace.
Wow. Okay, that's more than just a partnership. That's a major sales channel.
Absolutely. It suggests deep integration, potential customer stickiness if they're already on AWS. It's a big distribution advantage.
What else?
Their cloud-native approach is consistently highlighted. Their platform was built for the cloud from day one.
Unlike some older players who might have adapted.
Potentially, yes. And their use of AI, artificial intelligence, in their security solutions. That's seen as a key competitive edge in today's cybersecurity landscape.
And the Falcon platform itself.
Generally seen as innovative, providing that comprehensive security blanket we mentioned.
Okay, lots of positives there. That AWS integration sounds particularly powerful.
It does seem like a key differentiator.
Now, on the flip side,
Right.
What about potential concerns, red flags?
Well, that July 2024 software update issue is definitely one. Any major outage erodes trust.
True. Reputation is critical in security.
And the negative net income, despite the high revenue. We discussed the investment angle, but it's still something investors watch closely. When will they reach profitability?
Right. It's a question mark.
Then there's a class action lawsuit filed back in July 2024.
What's that about?
Alleging a breach of fiduciary duties? It's still under investigation, apparently.
Legal issues always add uncertainty.
Yeah.
And potential costs down the line.
They do. And one last point from the materials. They decided to end that customer commitment package.
The one they introduced after the outage.
That's the one. Ending it might have some implications for customer retention or perception, perhaps.
Interesting. Those are definitely important points to weigh. The lawsuit especially bears watching.
Agreed.
Okay, let's shift focus again. What about the neighborhood they live in? The competitive landscape?
Oh, it's crowded. Fiercely competitive, no question about that.
Who are the main rivals?
The sources mention companies like Palo Alto Networks, for example.
What are they doing?
Apparently offering incentives for customers to consolidate, to put all their security needs onto Palo Alto's platform. That's a direct challenge.
Trying to steal market share.
Essentially.
Yeah.
And CrowdStrike also faces competition from others who might try to, capitalize on past issues like that outage.
So standing still isn't an option. Innovation is key.
Absolutely crucial in this market.
So how does CrowdStrike try to stand out? What's their unique selling proposition based on the materials?
It really comes back to those points we mentioned as strengths. Primarily that cloud-native platform.
Built for the cloud era.
Right. And the strong emphasis on using AI in their security tools.
How does that compare to, say, Palo Alto Networks or others?
Well, Palo Alto Networks is often seen as having strong roots in network security, maybe more traditional hardware approaches initially, though they certainly expanded. Others like CyberArk have a more specific focus like identity security.
So CrowdStrike's angle is the broad, cloud-first, AI-driven platform.
That seems to be their core differentiation strategy, yes.
Okay. That cloud-native point keeps coming up. Seems vital.
It does.
All right, let's get into the valuation metrics. How is the market pricing this company right now? And what about its financial health?
Okay, valuation. The price-to-earnings ratio, the PE, it's quite high.
How high?
Around 721.64 based on the data provided.
Whoa. 721, that's up there.
It is. A PE like that means investors are paying a very significant premium compared to current or past earnings.
So huge growth expectations baked in.
Precisely. It's a bet on very rapid future earnings growth, not current profitability.
Got it. What about debt? Are they leveraged?
Actually, no, their debt-to-equity ratio is pretty low, around 22.4%.
So not much debt compared to the company's equity value.
Correct. Total debt around $789 million versus stockholders' equity of about $3.3 billion. That indicates a relatively strong financial position from a debt perspective.
That's generally seen as a good sign, right? A financial stability.
Usually, yes. More flexibility.
And what about cash generation? Are they burning through cash or bringing it in?
Their free cash flow has been trending positively. It reached $1.13 billion in the latest fiscal year.
So, despite the net loss, they are generating substantial cash from operations.
That's right, which gives them that flexibility for reinvestment we talked about.
What about return on equity, ROE?
That looks competitive, around 35.2%. It measures how effectively they're using shareholder investments to generate profit, though in this case it might be influenced by factors other than net income, given the loss. Still a decent number.
Okay. Any other key metrics?
The price-to-book ratio, PB, similar story to the PE, it's also elevated,
How high?
approximately 24.31.
Hmm.
Again, reflecting that premium valuation the market's assigning, this time relative to the company's book value or assets.
So high PE, high PB, definitely price for growth.
Seems that way. Also worth noting, no dividends.
Typical for a growth-focused tech company.
Right. They're reinvesting profits back into the business instead of paying them out.
And finally, volatility. Beta.
The beta is 1.1 time,
Meaning?
meaning the stock tends to be more volatile than the overall market. A beta above 1 suggests higher volatility, so bigger swings up or down compared to the market average.
Not too surprising, maybe, given the sector and their growth focus.
Agreed. High growth often comes with higher volatility.
Okay, looking ahead then. What are the main drivers that could propel them forward? And what are the big risks looming?
Key drivers seem to be the overall macro trends. The increasing demand for cloud-specific security solutions is huge.
As more companies move to the cloud.
Exactly. And the growing sophistication of cyber threats, that unfortunately drives demand for advanced defenses, like the AI-powered stuff CrowdStrike offers.
A sort of unfortunate tailwind for them.
In a way, yes.
Yeah.
Also, their ability to continue forming and leveraging those strategic partnerships, like the AWS one, will be critical.
The risks.
Potential changes in government regulations around cybersecurity could impact them. The constant, intense competition is always a risk.
Someone could always come up with a better mousetrap.
Or just compete aggressively on price. And then there are the broader macroeconomic factors.
Like a recession potentially hitting tech spending.
Yes, that could definitely affect customer budgets and slow things down across the board.
Those macro factors are certainly a cloud over many industries right now.
They are.
Okay, last piece here. Analyst sentiment and sort of the general investor buzz. What did the sources suggest?
Analyst sentiment seems generally positive, judging by the recent rating upgrades and price target increases we mentioned.
So the professional analysts are leaning bullish.
It appears so, on average. Investor sentiment, though, might be a bit more mixed.
No, so.
There's definite optimism about the long-term growth story, the technology, but it seems balanced with some caution, stemming from those recent challenges, the outage, the lawsuit.
Understandable caution.
And you see discussions online, places like X or Reddit, often focusing on their AI innovations and market leadership.
But you always have to take social media chatter with a grain of salt.
Absolutely. Always important to verify information from those kinds of sources independently.
Okay. So let's try to pull all of this together. Looking at everything you shared, we see a company with really strong revenue growth.
Undeniably strong top-line growth.
And a leading position in a market that's expanding rapidly cybersecurity, especially cloud and AI-driven solutions.
Right. They're definitely in the right space, technologically speaking.
However, they're still navigating towards consistent profitability on the bottom line.
The net income isn't there yet.
And those past incidents, like the outage, plus the constant competitive pressure, those are real factors to keep in mind.
Absolutely. Cannot ignore those.
And that high valuation we discussed, it really suggests the market has priced in some very significant expectations for future performance.
The bar is set high.
Which leads to, I guess, the important question for anyone listening. How do you weigh that impressive growth and the innovative tech?
Against the current lack of net profit and the potential for volatility in this really tough competitive field?
Yeah, it's definitely something to think about as you continue to follow CrowdStrike.
It's certainly a complex picture. You've got significant opportunities, but also inherent risks in an industry that changes so fast. Understanding your own investment approach, your tolerance for risk, that's going to be crucial here.
Well said. If you found this exploration insightful, please do subscribe, like, and maybe leave a comment with any further questions you have.
We always appreciate the engagement.
Thanks for tuning in.